Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for November 26, 2007. Well, I hope everyone had a wonderful Thanksgiving weekend and a nice little break maybe from work. And today we got back to the action on Wall Street, and there was a lot of action going on. There's no doubt about this. The markets are more volatile than I've seen them since probably the internet bubble burst back in 2000-ish area, 2001, 2002, and the volatility in this market is just unparalleled, without a doubt. Without a doubt, there's not much to say in regards to positive in this market. Today we looked to move positive, and the markets did move positive slightly early on, and at one point around lunchtime. And as quickly as that happened, we sold off. And not only did we sell off, but this market really started to dump out hard to the downside. And we saw this market close down 237.5 points on the Dow, or 1.83%. The Nasdaq down 55.5 points, or 2.14%, and the S&P down 33.5 points, or 2.32%. Overall, the S&P was the biggest loser today, down 2.32%, with the Nasdaq following close behind at 2.14%. Now, just getting into some interesting things here. We saw some positive vibes off the sales on Black Friday. However, we did see consumer spending less per person, but more people were out. And this is what I would caution everyone in. Initially, it was taken as a positive response. As consumers, there were tons more people out shopping, and this was a great thing. But if you think about it closely, if more people go out when the bigger sales are on, what that's showing you is more people are concerned about how much things are going to cost, all right? And if you have everyone going out on Black Friday when everyone's trying to get cheap things, everyone's up at 6 in the morning flooding these stores, then what it's telling you is that everyone is out there trying to get the bargains, and once they're done getting those bargains, they don't plan to spend much more money. So I think that is a little concerning to the market and the overall consumer spending, is that per person spending was down a couple percentage points, but there were more people out there. And again, that was viewed as positive at first, but if you really think about it, that might not be so positive. You want people waiting till maybe, a week or two before. You want people shopping all the time, not just when the biggest huge discounts are out there. Now, looking at this chart of the intraday ES, and ouch. All you can say is ouch. And what we talked about here is a major decline in the late afternoon. And I'm going to show you here. Initially, we started up here, starting 5, 6, 7 o'clock in the morning. We started to sink. Now, we were gapped up last night, and early this morning, the market was up big. You saw the Dow futures up close to 100 points. But as the market came closer and closer to an open, you saw this steady decline here. Okay, steady decline all the way right into the open right here. Okay. At that point, you saw a small rally right up to that 200 moving average right here, or excuse me, the 50 moving average right here, at which point we just started to sell. And we sold pretty sharply all the way down to around lunchtime, and this is about 12 o'clock now, at which point we started to rally. And this took the market positive here, and we saw the market getting taken positive just for a split second before the after lunch volume came back in the market. And when this volume came in, it was very impressive, to say the least. You had a heavy volume to the downside. And look at this sell-off here. Really no bounces. In fact, what's so amazing about this is you just see the flat stochastics. Ever since this point right here, and I'll draw that up here, and we can even bring up this line just generally right around here, you can see from this point on, the stochastics are almost flatlining on the bottom right here. Okay, and that's amazing that you barely ever saw a bounce here. Just constant. Look at all the sell candles. Okay, look at 1, 2, 3, 4, 5, 6, 7, 8, 9 candles down without a positive candle, meaning that you had one flat candle here. Other than that, all red candles, and it was just a flat candle. It wasn't even a positive candle. So that is very, very significant to realize that the market really took a smack this afternoon. There was a ton of selling. In fact, look at this last candle. This is right before 4 o'clock, 3:50 to 4 o'clock. Look at the volume bar here. Now, early in the day, I was telling, the chat room, I said, guys, at least as of now, we're doing very light volume. And you can see here, early on, yeah, we had a little good volume here. But as the afternoon wore on, lunchtime came, volume lightened up, and this is what usually is a hangover in the markets from a holiday weekend. You usually have that hangover effect from a holiday weekend where people are away or maybe not back yet. But sure enough, by afternoon, when this selling started, look at the increase in volume. Okay, all around huge volume, especially this one candle right here. But even these candles right here, very, very heavy volume. And overall, you have to take this as a bearish sign. Now, what I want to show you here is a couple technical things. This is the intraday SPY, the spiders, which tracks the S&P pretty closely. And what you can see, the same type of movement. You had that move up early on, the big move down, the move positive again, and then that hard sell-off. But what I want to focus in on is the daily chart, which is now what we're looking at. Okay? Now, what's so interesting about this daily chart here is that you see today a big red candle. And what was interesting is that we saw a bounce on Friday on extremely light volume. Look at the volume down here. The volume was extremely light on Friday. And you saw a move up. And what we said was, well, maybe this is a bounce starting. Possible bounce here. I thought it might have been a possible bounce starting, but we wanted to see confirmation by a move up and a close higher today. That did not happen. In fact, not only did we had a full bearish engulfing candle taking out this whole move up on Friday on the SPY, but we actually took out the lows on Wednesday as well. And that's even more bearish. And now you have a close below here, down here. This is a new closing low. And if you want to stretch it all the way over here, look at where we are. This is August. This is the low day on August where we reversed that big day. Then we had the Fed rate cut and so forth to save the market, or everyone thought it was the surprise Fed rate cut to save the market. Well, we're right closing on this August low now. Okay. In fact, the Dow is down very, very much so, coming all the way down to 12,750 about at the close. Now, the question is going to be, where do we go? Now, are we going to see this low here? This is the first stop. You're probably going to see this low here, maybe this low after that. It's going to come into some point. You probably have to test the lows at this point. Though I do happen to say, guys, I have to be honest with you, I do think this market is very oversold, and it would not surprise me. And again, you have to take the technicals, and right here the technicals are showing us some bearish signals. But in the back of my mind, I got this little guy talking to me in the back of my mind saying, prepare for a possible surprise in the market. Whether it's a surprise rate cut from the Fed, whether it's this or that, just be aware, because especially with this close, everyone's going to turn bearish. All right, you're going to have a ton of bears come out now saying, oh, we just took out the lows. This bounce on Friday was nothing. Consumer spending wasn't as good anymore as we thought originally. You're going to have a lot of sentiment out there negative. And when we get that put-call ratio to come back above that 1.5-ish area, a put-call ratio of 1.5 or greater, then at that point I will say that wherever we are in this area here, I will say be prepared for a spike up or a small bounce in the market, at least a couple days on the positive side. So just to keep that in mind, right now there's two angles, and I'm trying to present both angles to all the viewers here. You got the positive side where we are getting very bearish, and this close today was a very bearish sign, but in many times that makes everyone bearish, thus the market needs to bounce to take those shorts out of the market when the put-call ratio gets above 1.5. But on the other side, on the negative side, there's no doubt about it. This was an ugly candle day. We closed closed even lower than last Wednesday here, and we are now in the range of August lows. So you have to respect that and say, well, now from a technical standpoint, we very well likely will come down to this point or even this point here before the next support level is reached in this market. So there is downside coming, probably just a matter of when and how. And we will know shortly. Within a day or two, we'll be able to tell which angle this is. Whether or not there are too many bears and we're going to get a bounce, or whether or not we break lower than this here and we start testing this level here with a possible bounce, or if we go down to here. Okay, so keep that in mind. Now let's look at the NASDAQ. Again, NASDAQ, another negative call. What's so interesting about this, on Tuesday, we talked about a possible bounce. On Wednesday, we talked about a possible bounce if we didn't see confirmation on the downside. And that's exactly what we got on Friday. So here's Wednesday. We closed below the 200 moving average on the NASDAQ for the first time. But again, you got to have confirmation. And confirmation here is a close below the low of that day on a second straight day. You need to see two straight days to signal that we are. Now, Friday, we got to move back up, and it saved the market above that 200. So in many instances, okay, well, maybe we'll rally now. No, not at all. In fact, we sold off hard today, closing right at the lows here from Wednesday. In fact, we closed a little bit below the low from Wednesday, meaning we took out this whole candle Friday, and we actually took out the whole candle and closed lower than Wednesday's low right here. And you got to take that as a negative signal. Now, the question becomes, where's the next spot? Again, you got to start looking at August lows, and that's another big drop for the NASDAQ. And I have to say, if you're going to look at the NASDAQ for a major rollover here, what you have to pay attention to is Google, Baidu, Research in Motion, and Apple. Those stocks continue to hold up extremely well in this market. In fact, Google was down today, and here's Google's chart, and Google moved above that moving average. But look at the bounce recently. The NASDAQ's going like this. Google's bounced like this. So keep that in mind, even though we did have a reversal today. Baidu. Baidu was up $17 today. All right, even though it rolled over late in the day with that hard sell-off, you're still talking about this is where it was as of Friday, and this is where it closed. You had this whole move up here. All right, research in motion. Apple. We'll look at Apple first. Apple still again was up $1 on the day, even though the Nasdaq was down 50 points, 55 points. So my point being here is that whatever's going to happen, if we're going to have a big sell-off here in the Nasdaq, and I mean a big sell-off back to those August lows, you got to have Apple, RIM, Baidu, and Google participate. So what we're looking for here is, do these things break down? You see these stocks break down, and we're going to August lows without many stops along the way. If these things continue to hold up, if you see Baidu and Google positive tomorrow, if you see RIM positive, Apple positive, then it's very likely they will bounce this market. Those are the keys here, and you can follow them very easily on the Qs. And I pointed this out on the daily Qs chart where we haven't taken out the lows here. Now, we close below this low right here on this candle, then we're going to this, and you're going to see those stocks sell off. All right, folks, have a wonderful day. We'll be back to talk to you tomorrow. Take care.